Test, test, test. Hey, hi all, hi all, hi all. There we go. Oops, sorry. Test, 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 test. Test. Brilliant. Okay. We are up and running on air. Brilliant. Hi all and welcome to another edition of Midday Market Review by TraderCast. My name is Phil and I'll be your presenter today. A little bit about me if you're watching this for a first time. If you're looking for the community, check out TraderCast. If you're looking for the education, check out my trading skills. You'll find plenty of my courses there. Some of them are completely free. Hi all and welcome to another edition of some of them are completely free. See how we teach, what we teach, and if you need help with anything else, let me know. Okay, a little bit about myself. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I taught many people how to trade. So basically what I'm trying to do here is I'm trying to give you a practical application, a hands-on experience of what I firmly believe a novice trader should be able to do. So this is not complicated. What I'm trying to do here is based on price action, trend following, volatility triggers are based on some kind of economic data releases or economic calendar, and very simple price action trading. Some of my trades are scalping trades, some of my trades are swing trades, but basically these are my opinions and experiences only. They're not advice. Since we are talking about some live trades, for those of you who watched yesterday's session, you saw I had a few trades in crude oil. Some of them were closed, and then I reopened again. So I had one trade open from yesterday. I'm still long sterling dollar. I closed half of my position at 122.77. I still have half running, and then I opened another trade in crude yesterday afternoon at 111.40. I closed 1/3 at 115.40, and I'll show you all of that in a minute. I still have 2/3 running, and I will manage that position in front of you today because I want to make sure that it's all done properly. So that entry was based on this. Okay, so we talked about the trend, and then we talked about the pullback to trend line, and then we saw a loss of support, and then this is a retest from underneath. Now if you remember, I was looking at this in this way, and I was saying all of this can morph into a falling wedge, and these type of patterns, they have the tendency to break to the upside, which is what we got here. Now the price that you're seeing here is slightly different than the one that I've traded on, because different brokers will give you opportunity to trade on different contracts. So from the shorter term intraday point of view, 1 hourly price is showing you a really nice bullish engulfing here. If you go down to a 15-minute time frame price action, you're seeing a reversal here, and then I saw this hammer here, and I was actually talking about this hammer here during the live broadcast, and I was saying, look, I would like to see this hammer finish green, and that would be quite encouraging for me, and I will go long after that finished, and I'll show you where I entered shortly after, and then we saw this type of move and a push higher. So really happy with this, and there was a logical reason for taking profit up here, because if I extend this to the left, you can see that there is a cluster of lows here, so therefore there is horizontal previous lows, price broken, retested, so previous support becomes newly found resistance.
So moving into 10 minutes now till we get US data for May. Industrial production month on month, we're looking for 0.4% on a prior 1.1%. Capacity utilization, we're looking for 79.2% on a prior 79%, and the manufacturing production, we're looking for 0.3% on a prior 0.8%.
So I've decided to take 1/3 of that position off at that time, and let me just show you where I am at the moment. So open chart in a new window. Okay, here we go. So yet again, this was all explained yesterday during the session. So the ultimate take profit would be at these swing highs at 121. This is where I entered. So this is a 4 hourly. Let me go down to an hourly and I'll show you that a little bit more precise. You can see there is this bullish engulfing candle, and if I show you this in a 15-minute time frame, you can see where the entry was. Sorry, here we go. So the entry, I'll make it larger so you can see. Oops, sorry, here we go. So there is that hammer that I was telling you about, this hammer here. And then when the next candle opened, I decided to go long straight away. My stop loss was well below, and instead of price going higher, there was another red candle lower, and I had to nurse this as a losing trade for a while, but my stop wasn't triggered. And then when I saw this green candle forming, I was really encouraged because that's a bullish engulfing candle. And then you saw breakout, a little bit of consolidation, another 1, 2, 3, 4 candles, a little bit of consolidation, and so on. So when I saw this basing here, this is the previous low and previous low around 11540. I decided to get out of that trade, and then we are seeing a move higher overnight, and now all of this is happening. So this is my current position. This is my current position. What I'll do here is I will move the stop loss above break even to lock in a few more points, about 63 points on this trade. I don't like this pullback lower. If the price keeps on falling, I will likely get out of this trade. I will pay attention to this low here in particular. Then
French Finance Minister Lemaire says that they all share, the EU finance ministers all share assessment inflation to last month's.
So if I see a loss of that, I will get out of my trade. Probably I wouldn't wait for my stop loss to be picked up. But it was a good trade, and let's see how that plays out. Let's see how that plays out. 11308. Okay, cool. The other open position that I have is the one. Hi, Samuel. Oh, sorry to hear that.
So Bullard here says Fed, ECB have credibility, soft landing is feasible. So Bullard says soft landing is feasible if post-pandemic shift done well.
Yeah, that happens sometimes. And unfortunately, that's part of trading. Markets can become volatile, or they can change, or sentiment changes and things like that. So, yeah, but hopefully you've learned something from it, and you'll be able to recognize the same or similar setup again. So, yeah, good to hear from that, Samuel. Okay. So the other thing that I had open, if you remember, I was looking at cable, and then we talked about dollar yen ahead of Bank of Japan. And if you remember cable, we looked at this reversal, breakout, and then retest, and then a push higher. And I was saying this area here is definitely of interest. I would like to see a breakout. I would like to see a breakout of this area and then a retest from above. That's what I was looking for. And as long as the price stays so previous lows, then potentially I could see it running towards 124.70, even 124.50. But the big level of interest was at 123.40, 123.40. Instead, what happened is the price did go up. We had that little correction, and then if I show you this here, you can see that. So I'll remove this drawing. See, pullback, indecision, nice sign, another red candle, then selling pressure with, you can't really see it here, but I'll remove it here. So here we go. There's a selling pressure here with a little, it's not dodgy, there's a bit of a body here as well, so it's like a spinning top with a high wick. Then another little red candle, then a little hanging man here, then another red candle, and then another inverse hammer. So hammering, unable to break through, and then eventually, boom, off it goes. So once we lose that, support. Lose support, becomes resistance. Look, loss, retest, immediate sell. Another. So I'm thinking of maybe I should get out of that position altogether, because it is possible that this can move lower fairly quickly. Now, if I connect this low and then...
So we're just under 3 minutes now for this US data for May. Industrial production month on month, we're looking for 0.4%. Capacity utilization, we're looking for 79.2%. And manufacturing production, we're looking for 0.3%. Comments here from EU's Gentiloni says they will continue supporting economies in a more targeted way.
Wow. US are opening. Look, Nasdaq is really tanking. DAX is also selling off. S&P is selling off. I had the setup for S&P short 37.40. That's what I would like to short it, but it didn't happen. I'll talk to you about all of that in a minute. So I'm keeping an eye on this 122.15. Pull back to that level. If we don't see a bit of a rally, I think we'll see another leg lower. So just to be on a cautious side, I might close a little bit more of that position, maybe leave something very insignificant running, just in the case things change. So there is my cable. Open market in a new window. So that was all open yesterday, and the reason we talked about Bank of England, we talked about the reasons why this trade was counter trend trade, but good trade. Now this was the breakout of the previous high, push higher. So now I don't really like this anymore. I have 3 contracts left. I had 5 contracts on this trade. I closed 2. What I'm going to do is I'm going to close another 2 at this level, pay myself a little bit, so I'm going to get out of this trade, and I'm going to leave my stop loss where it is. So my stop loss is up here, and it's still in a profit. About 21 points is still in a profit. So just in a case if this flushes lower now after the numbers, I'll be stopped out with a little bit more, but I don't really like this reversal. It's deeper than I thought. I wanted to see breakout, a retest, and then rally from here, and that didn't happen. So so far just getting out of this position, but there is very little. There's 1 contract left. That's a 1 mini contract. It will be equal to $1 per point. So very small position now, just to have something in a case if we see
10 seconds.
So let's see. We have 10 seconds to numbers. Let's see how this reacts, and then we can take it from there.
We're still waiting on that US data. 0.2% for industrial production month on month, 0.2%, capacity utilization at 79%, and manufacturing production at negative 0.1%. So we see US May industrial production month on month at 0.2%, on an estimate of 0.4 and a prior of 1.1%.
Industrial production month on month 0.2, forecast was 0.4, so weaker number, so much weaker number. Yeah, this is Dow. Dow looks like it's pulling back. This is Nasdaq. We have about 15 minutes to US Open. And this is the setup that I was about to talk to you about. And unfortunately, it didn't really happen. I was looking at short sell for S&P as a swing type trade at 37.40. But I'll explain this setup. I'll explain it to you. It still might happen. I don't know. But I'll do that in a second. Okay, so first things first. Normally the way these sessions start, I would say, hey, this is who I am. If you're brand new, introduce myself, because I know lots of people are watching this for the first time. They have no idea who this guy is and why should we even listen to him. The channel looks quite dull. There is no fancy looking cars and lifestyle pictures on it. There is very little graphic work of some sort. It's just a very simple channel with few videos. Now let's see. I can see a few people are liking it, a few people are giving a thumbs up, so you might be finding it useful. Normally I would start this by going through top 5 things you should know before you start trading, before the US markets open, and then that set the expectations for the sentiment, i.e. what to expect, the economic data releases which could trigger the volatility, and then I would go into few charts, look at few equity indices, look at few commodities like gold and oil, and then I would look at few currencies, and normally that's how it kind of works. And then if I have anything open, or if I see anything that's of interest that's triggering a live trade, I would do it in front of you, let you know I'm about to do this. This is the level that I'm paying attention to, and then if I do, I would show you how I would manage my position. And yet again, this is very basic, very basic way of trading. Sorry, I don't like this now on my oil. I think I will get out of that trade. Yeah. Okay, so let me show you that oil. It's breaking down to that
Putin
level.
says all tasks of a special military operation will be fulfilled.
Here we go, 113. I don't like it anymore, so what I'm going to do is I'm going to do the same. I'm going to close 5 contracts out of this trade, get out. I'll leave 2 contracts. 2 contracts running with a stop at the same level. So just in a case if this reverses and it starts going higher, I will leave it. I'll have something in, but I got out twice on this trade. I got twice on this trade. Don't like this corrective pullback. Let's see. I might look to buy again at some point, but out of this larger position, at least I have something in. Robert in the community is saying, hey Philip, are you broadcasting on Monday because it's bank holiday? No, US markets are closed on Monday, so there'll be no broadcast on Monday. Yet again, to set the expectations with you guys. Thank you for reminding me, Robert. Thanks, Robert.
Feds Bullard says both Fed and ECB may be able to achieve a relatively soft landing.
Hey, Mr. Bob Bars, how are you? Yeah, so just to set the expectations with you, next week I'll be broadcasting Tuesday and Wednesday. I'll try and do Thursday as well because I'll be away for a couple of weeks, and then I'll be back with you by the 10th of July or something. I'm taking a couple of weeks away from 10th, sorry, that's Saturday. 11th of July, I'll be back with you. Hey Caraldo, good to see you. Hey, hi, haven't seen you for a while. How's work? Patrick, Robert, Shiyuka 7, Hamid, quite a few people in today, so it's always good. Guys, if you have any questions, let me know. Billy, Zhao, Uzi, Mr. O'Connor, Hamid, Patrick K, Robert Shiuka 7, Abdul Wali, Alan, Bastian, Gillian, IDD, Investor X, this is not really investing channel, this is more trading, but hey, hopefully you're finding this useful. George or Jorge, Andreas, Katia, Maurizio, Mudassir, Nakuri, and Semedo. Hopefully I'm pronouncing this correctly.
Fed's Bullard says Volcker had to earn credibility. Fed and ECB have considerable credibility.
Caraldo is saying in the community, can I check out DAX? Yeah, I would love to do DAX straight away. But let's see where that takes us. Okay, so
Fed's Bullard says Fed and ECB credibility suggests soft landing is feasible for both.
Caraldo, I'm doing DAX for you right now. So here we go. DAX, I'll just delete some of these annotations because they've been here for a while. So let's identify support. Support is cluster of these lows and then cluster of these swing highs here. Point of control, we have this area here. You can't see livecast. Can you see livecast, guys? Yeah. It's on. Yeah. Okay. It's on. Just checking. Can you see the live cast in the community? And the resistance. I just refresh. Yeah. The resistance is there. So from the trend point of view, this is downtrending market. I need to delete some of this stuff. So the idea would be a rally into here for another leg lower, because then you have high, lower high, lower high. All of this here potentially looks like a little rising wedge, and yet again, apologies, I know I keep seeing them everywhere. I just see them everywhere and I tend to trade them. No, I haven't traded DAX for a while. I was actually in FTSE. This looks like a flag. So 1, 2, 3 touches, 1, 2, 3, 4 touches. So if it is to break to the downside, this is how it might look. It might look like this. So this type of patterns, they have a tendency to break in the direction of the prevailing trend. So they do something like this, a little retest from underneath, so loss of support, and then retest, and then another leg lower. And then another leg lower. Loss and a daily close below 12,900 would likely be very, very concerning for the DAX traders. The other alternative from a bearish point of view, oversold rally into 13,360 or there. And then another leg lower. So both scenarios are bearish. This one here would be based on the fib. So let me just show you that. So swing high to swing low of 50 to 61.8 fib retracement. So this zone here is really interesting for the short sellers. Also from the multiple layers, why? Patrick, I don't know why. It's a good one. Um, that's strange. Thank you, Robert. Just restarted. It's work. It's all working here. Thank you, guys. So we have this zone here, which is of interest from the short seller's point of view. Decent support. Okay, okay, yeah, yeah. It seems to me that it's working now again. That's a support. And let me just go and show you how that looks with the resistance. And insert shapes. It's Friday, guys. It's Fridays. We have gremlins here. Some guys are saying that they briefly lost the broadcast in a community. What's wrong with this? How come it's not working? Here we go. And that zone here is a fairly decent resistance. So major support down here, resistance for DAX. And then this is based on multiple layers of evidence. What do you mean by that, Philip? Well, in some of our training courses, we talk about multiple layers of evidence approach. So what you would do is you would identify the longer term sentiment. You would identify who's more dominant in the market, bulls or bears. You want to trade with them rather than against them. Then you would identify the trend. So where is the trend? Well, here is the trend.
Geopolitics. Hungary's minister sees a Poland-style EU deal on the Recovery and Resilience Facility funds.
So there is a trend. Who is more dominant here? Bears. What do you do in a bearish trend? You look to short sell. How do you short sell? You short sell oversold rally, or you short sell a loss of support. You trade the continuation pattern to the downside, continuation pattern to the downside, continuation pattern to the downside. And then if you open, this is 1 hourly, I can open this here and this here and then this here and this here in 15 minutes, and they will all look very similar to this or this. Markets are fractal, they exist in multiple time frames, and yet again, this channel should not be educational channel. This should be talking about live trades and practical application of market analysis. But for some reason I have a tendency to just slot into that educator mode and try and explain everything. Guys, if you need to know more, go and check my trading skills. You have a course on this, it's completely free. Okay, anyway, so multiple layers of evidence pointing to the resistance here, and the way this would work is you have oversold rally, you have falling resistance trend line, you probably have a pattern, you also have this green line, and green line in my case it's point of control, which is where I'm paying attention to this level. I might decide to do something at that level. And then this shaded area here is Fibonacci retracement 50 and 61.8. So what I would expect to do, I would expect to see a rally there and then a big reversal. Now what would prompt me to enter in here? Well, something like this. Something like this. Something like this. I don't know if I'm explaining this correctly, but that's what I'm looking for. Okay, so if that happens here, I would get in whenever the pattern is completed. So it's not a single level. You read the price and you react to it. Then I would put my stop loss slightly above. So let's say I want to short at 13,410. But by the time the pattern is completed, it gives me the opportunity to enter at 13,350, for example, or 370. Doesn't matter where it is. So it takes a while for that pattern to complete. Then I would put my stop loss above. In this case, it would be 50 or 100 points higher. That will be predetermined amount of risk on my account. So it will be 1%, maybe even less. And then I would look to take profit lower, and my profit target would be down here at 13,000 or thereabout. So from the risk to reward ratio point of view, I'm risking 50 or 100 points to potentially make 300 to the downside. Is that acceptable amount of a definite amount of risk for a potential reward? 3 to 1, 6 to 1. If I have 50 point stop loss and I'm looking for 300 point gain, great. If I'm risking 100 but looking for 300 potential gain, that's 3 to 1. Both of them are accepted for me. Yes, answer is yes. Then you get in and you let it play out and you manage your trade, and that's it. So Philip, shut up about the education and show me the money. Thank you. How is gold? Samuel is saying. Okay. Caraldo, do you need this posted in a community? So point of control at 13,360, sell zone at 13,340 to 13,410. Stop loss 50 or 100 higher. Take profit at. That's roughly what it is. I can post it in the community as well. I can post the chart in the community if you want, but that's what it looks like. Now I'm actually quite happy with this. This might bring me to my setup here in S&P. This might bring me here to a setup in S&P. Samuel will talk about gold straight away. Apologies, I'm just gonna remove some of this stuff. Will you stop doing that. And Dow, S&P, Nasdaq, UK. Samuel, I'm gonna go and talk about gold very quickly now, and then we can talk about S&P. We are at the open, so let's see. So gold appears to be bouncing off the lows. If you remember, if you watched previous broadcasts from yesterday, day before yesterday, you know I was looking for a bullish reversal. I didn't get on this trade because now this is slightly changed for me. So here we go. So there is the same, absolutely same, identical principle here. Okay, so where is my point of control? Up here. Okay. Why is that important? Well, because sorry, let me just try. Okay, that's better. So where is my point of control? Well, around here, 1870, 1875 or thereabout. Why is that important? Well, because if we see a rally from the current levels, then the price could come to that level, and then we could see another dip. Oh, well, welcome. Well, Caraldo, anytime. So that's the kind of a bearish scenario. I can also use the fib to identify this level, so we can use the various different fib levels from this swing lows to this swing high, from this to here, from here to here, and then you'll see clusters of fibs pointing to that level. So from here to here there's that 50 to 61.8. multiple layers of evidence, keep repeating the same thing. Guys, hopefully you are benefiting from this in some way, because I know you probably go somewhere else. Oh, I'm stopped out on my crude. Okay, let me just show you this. My crude oil position is no longer open. My crude oil position is no longer open, so that's all done. There's nothing open. I'll reassess it again, and then I will try and get in on this trade again if I can. I'll update the open trades. My cable is still open, but gold, that's what it looks like to me. So 1865, 1870, 1875, that's a big resistance. Now from the intraday point of view, I would like to see a breakout and a move higher, like that. So the major support is down there. There we go, Samuel. Hopefully this is it okay? The last thing that I want to talk to you about is S&P, and yet again, same setup over and over and over again. Now here we go. The point of control for S&P is at 37.40.42, which is this area here. It's shaded here. Breakouts above that level could target 37.70. If I see a rally into that level and a rejection, I would likely be looking for a short sell, potentially targeting these lows here, 36.60, 36.46. Exactly the same setup. We looked at 3 different markets. I've shown you the same approach, same step-by-step explanation, prevailing trend, pattern, point of control, resistance, support, what to do. So what would I like to do? I would like to go short here if I get one of these candles, so bearish engulfing, or the combination of these 3, which is called evening star reversal, or if I see a candle that looks like this, which is a shooting star candle, inverse hammer up here, or if I see candles that look like this, which is called tweezer reversal pattern, or a spinning top, or something like that, or a candle that looks like this up here. So that's the basic premise. If I do go short there, I would put the stop loss higher, about 25-30 points higher. Where would I like to take profit? Down here to 36.60, 36.40. From the risk to reward ratio point of view, I'm risking 30 point risk, definite risk, for a potential 100 points lower.
Geopolitics. So Dutch government supports Ukraine's EU candidate status, according to ANP.
So 25 point stop for 100 points gain is 4-to-1 risk to reward ratio. 30 point stop for 100 point gain, 3.3-to-1. I'd call it 3-to-1. It doesn't matter. So does it make sense? Yes. Would I take it? Yes. So that's what I'm looking at. Now, alternatively, and there is always alternative scenario. Alternatively, if I see a rally, and then a breakout and a daily close above 37.40, and then a retest like that, that could create a short squeeze, and then we could see another spike higher. And I would likely trade long I would very likely trade long at that time, or look to add to long positions. So that's the basic premise for S&P. That's basic premise for S&P. Currently, I have nothing open in this market. It's Friday. We have various different expiries today for options and futures and stocks and even indices as well. So let's see how this plays out. But that's what it looks like. The markets are long overdue oversold bounce back. So even if this trend, downtrending market, is to continue to the downside, it wouldn't be unusual to see a short squeeze. Loads of people are shorting now. They have stops here. If they get picked up, we'll see a push higher on a falling volume and the markets move higher. It's not unusual to see a wonderful bullish spikes higher, even in a most severe and clearly defined downtrending market. And what that does is that creates another lower high, and it enables market participants to enter at the more preferential rate. Retail traders would get in and look to short. They'll get stopped out. When they get stopped out, the intelligent money investors are coming in and basically selling into that oversold bounce back, because they can see it by the volumes, trading volumes, that it's not healthy buying. It's not buyers coming in and pushing the market. Basically, short sellers who are getting stopped out are pushing the market higher, and so on. So that's the basic premise. But that's the area, that's the level, and that's what I'm looking at the moment with S&P. So what I'll do is I might have a little maybe a limit order. So limit order to short sell at 37.40. Stop 30, limit 100. Let's see. I might be away from the desk, and that might be triggered. I don't know, but I will likely remove that as well. I'll keep an eye on how the price action is developing, and then I might remove that order. So this is not a live trade. This is just a pending order for me. Okay. Pending order. Okay. So gold is still consolidating. This is Dow Jones. Euro dollar, we looked at these two options. It looks like it's breaking out higher. Cable, it's selling off. My cable position is still open, but I'm making very little money on this trade. I was speaking to somebody in the community just before we started, and we were talking about open trades, and I told them also I have cable, but it's very likely that I will close it quickly today, because I just didn't like the way it was behaving. Longer term trend is more intact. So I'm still making a little bit of profit, about $38 on this trade. My stop loss is above here. I might get stopped out. This was a significant level of interest. So this high here, look, this is what I was expecting. Pullback, 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 boom, a buying opportunity. Because anybody who was scalping this market, they knew that this was a previous swing high. They bought this candle. This is only a 15-minute candle. So they bought it. And then there was a little bit of bounce that created high, lower high, lower high. Sellers came in. I don't know if you're seeing the same thing. There's a bearish engulfing, and then off it goes lower. So now the fact that this is below these lows is worrying. I have my stop at the right place. I took profit twice on this trade, keeping it running. And if I get a few more pips out of this trade, great. If I get stopped out, it's great. I'm in a profit as well. That's the basic premise. It's Friday, and I do want to... I do want to have a nice weekend. I do want to have a nice weekend. I deserve it. I work hard. That's what I say to myself. My wife doesn't believe me. But hey, here we go. Okay. Thanks, guys. We are coming to the end of the broadcast. We've covered a lot today. We've covered a lot this week. So hopefully you're enjoying it. Hopefully you're enjoying it. You're finding it useful and beneficial. I will be back with you on Tuesday because Monday is, I'll tell you exactly where we are now. So the US markets are closed on Monday. So if you are trading on Monday, if you're trading European markets, just be aware that the markets could become very dull in the afternoon. Juneteenth nation in the National Independence Day. Juneteenth National Independence Day. Markets are closed in US whole day, so no trading. Most of the traders are taking extended break. Don't particularly hold any positions in the afternoon because it might be difficult to get out of them, or the markets could, become a little bit volatile for no particular reason because of that low liquidity. But that's where we are with markets going forward, and I'll be back with you. Bob Bars, thank you so much. Samuel, thank you. Anybody else who's watching us, thank you. Hopefully you're enjoying it. Stay safe, happy trading, and bye for now. Enjoy your weekend. Make sure you take some money out of your trading account and pay yourself, no matter what it is. I had a couple of messages from somebody saying, what do I do? I have a small account, but I'm disciplined and I'm doing well, and but you see these people online, especially in social media, and they say, oh, trading gazillions per position and so on. Don't be seduced by stuff like that. Follow the same rules. Even if your account is a small size, it doesn't matter. Your objective for the first 6 months or 12 months or 18 months of trading is not to become millionaire with 100 quid in your trading account. It's to learn the craft, learn the skills, follow the rules, risk very little, cash in at the right time, get at the right time, get the confirmation to get in, manage your risk, get in, losing trade, print the screen out, check your notes, what did you learn from it, and so on and so on. And then at the end of the period of 6 months, 8 months, 12 months, 18 months, whatever you give yourself, assess it and say, I had X many trades, this many trades were profitable trades, I always risked this much, I made this
5
much.
minutes
So
now
then
to
you
the
have
top of
some
the hour.
audit trail.
We get the US leading index for May. We're expecting minus 0.4% on a prior minus 0.3%.
Then you have some audit trail of what you did and say, oh, okay, fine, so now my account grew by whatever percentage that is, or my account lost a percentage of it. So what did I do? Go through your trades and say, would I, now knowing what happened subsequently, would I still enter in the same trade? Why did I trade? Did I trade because I was bored? Did I trade because I followed somebody and they told me to buy or sell? Or did I trade because there was a logical reason for it? So what I'm doing here might help you with your analysis. You might confirm the same or similar level that you want to engage in. But at the end of the day, it's your money, so your decision. And whoever you trade with, make sure that your broker gives you a good service, that you're not overpaying for your trades and so on. and that's it. And then you have something to work with. Okay, guys. So look, I am going on and on and on about this thing, and I would love to carry on talking to you for the rest of the afternoon, but unfortunately, I need to go and do some trading for myself. So hopefully, this is a practical application of what I think novice traders should be able to do. You're enjoying it, and if you did give me a thumbs up, thank you. I'm really grateful. It's a small account with a small following, very basic. If you feel that somebody else might benefit from this type of events, let them know. And I will see you all on Tuesday. Bye for now. Thank you all.
3 minutes now to the top when we get the US leading index for May, expecting minus 0.4%.